In this episode, we're talking with respected financial journalist Alan Kohler, and we're going to discuss Australia's housing mess and how to fix it. We'll look into why first home buyers have had a worse time of it this century compared to last, why housing is so much more important to our economy than it is in other countries, and what he means when he says that housing wealth is both meaningless and destructive. Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent and buyer's agent mentor, co-host of Foxtel's Location Australia, author of Auction Ready and co-host of Your First Home Buyer Guide.
And I'm Chris Bates, mortgage broker, recently ranked number 5 in Australia out of over 18,000 brokers in the annual MPA Top 100 Mortgage Broker Awards. Before we get started, I need to let you know that nothing we say here can be taken as personal advice. We always recommend you engage the services of an appropriate and experienced professional.
Our guest today is Alan Kohler, an Australian financial journalist, television personality and former newspaper editor. He's known for presenting the finance segment on the news on the ABC television. Now, recently he published a quarter essay called The Great Divide, Australia's Housing Mess and How to Fix It. And today we've invited him along to share his thesis with us. Great to see you again, Alan. I think it must be 6 years since we first interviewed you. And back then I do remember really being struck by something you said about affordability. You said that housing isn't, the problem isn't that housing is not affordable in this country. It's more the fact that it's too affordable and that's what's pushing prices up. It sounds like you've changed your tune. Is that the case?
Well, yes, housing has become unaffordable. Now, 6 years ago, the problem was that interest rates were too low, which is why housing was affordable. House prices had gone up a lot, but the issue is that interest rates were so low that it was that everyone was fine with the price and were pushing the prices up. At the time, now interest rates have gone back up to kind of average, I suppose, and there's no doubt about it. It's unaffordable, and it's now we're now in a situation where the average wage earner can't buy a median priced house.
Yeah, I mean, I think that's when you break it down so simple, right? It's become a point where it's a have and have nots. If you have got income or you have got family wealth, maybe you can buy because you can make those numbers work. But if you're on a medium income and you want to buy a median property in our capital cities, just those numbers are disconnected. Is that sort of the big thing that you've seen that shifted, is that, what was really affordable maybe back in your generation when you were a younger man starting a family, let's say, versus what younger couples today have to face with?
Well, when I bought my first house in 1980, the average house price to income ratio was between 3 and 4 times, and that's what we paid roughly for our house. And it was the same with my parents. I sort of laid this out in the beginning of the quarterly essay I did. My parents paid the same, really, back in the early 1950s, 3 to 4 times income. And that's kind of what it's been. And right up until the year 2000, house prices rose at about the same rate as incomes did. So the ratio stayed the same. And so what happened in 2000 was that the house prices started to rise at twice the rate of incomes. And 25 years later, here we are with the house price to income ratio now twice what it used to be, eight times rather than 3 to 4 times. And the consequence of that is there's 2 parts of it. One is that people can't afford, it now takes much longer to save a deposit. So whereas it used to cost 4 to 6 years to save a deposit, now it's 12 to 15 years to save a deposit, which is kind of too long, really. And the other thing is that it's very difficult to service the mortgage. So people who haven't got family wealth, or at least parents who are willing and able to give them a help with a deposit, and who don't make well above the average income in their salary, really just can't afford to have an average house.
Do you think, Alan, there's a bit of a societal impact on high house prices? I mean, if you've got a big mortgage, let's say now, or you've put all your savings in for a deposit because you needed to, and then you've got a big mortgage, you don't really take the risks you would have if you weren't concerned about, your mortgage, or you weren't concerned about the issues about upgrading your home down the line. So potentially you took more risks and you started businesses, etc. Do do you also see that maybe the next generation are sort of coming through and saying, well, I'm never going to buy a house and I do need to take risks because that sort of go to uni and get a job's not there. So do you think we're going to start to see over the coming generations, a societal shift into how we act?
Of course, yeah. I think that it's a massive societal shift that's already taking place. One change is the way that it entrenches inequality. I mean, a lot of people's parents rent, don't have equity in the house that they can pass on as a sort of an early inheritance to help with the deposit. So therefore, those people don't buy a house. And it also, basically, looking at the house price to income ratio as a particular measure, the fact that it's now doubled in the past 25 years from 3 to 4 times to 8 times means that everyone's paying twice for a house what they used to. So my kids have been buying houses, recently bought their first houses over the last few years and paid somewhere between 1.2 and 1.7 or so. So what they would have been paying if the house price to income ratio was what it used to be is half that, right? 600,000 to 800,000. That difference is immense in terms of their life, how they live, what sort of mortgage they've got. It's a massive change in the amount of financial focus that has to now go into shelter and accommodation, and it's also been reflected in rents. So that what we've seen in the past few years is the rents have been rising at between 8 and 10% per annum since 2020, and that's had a massive impact on the cost of shelter for people. So really, although rents, house prices, the actual cost of buying a house has been increasing gradually over the past 25 years, rents actually took off from 2020, partly because of the shrinking of household size, but also because there was a sudden decline in available housing, and now that's continued, and there's been now a massive surge in immigration in the past 2 years. And obviously immigrants tend to rent to begin with rather than buy, and that's really increased the demand for rental accommodation over the past couple of years. So look, it's really now made shelter a big problem in Australia.
It is a big problem, but it seems to be a big problem that's very, very political, and it's almost like politicians actually are, they say a lot of things, but the bottom line is that they're going to upset too many voters if they really change things too much. So therefore, government intervention is what happens. You get more first home buyer incentives, you get more state governments trying to control the rental market and put restrictions in there, and sort of keeps, propping up or messing up a broken system. It's sort of interesting too that you talk about, that takes 12 years to save up a median, the median deposit for the median dwelling. But the fact is no one really saves for a whole 12 years, do they? And I guess what you're saying there is that the increased interaction or intervention of, on the part of parents and grandparents helping out their kids, so then that there's a the divide between the haves and the have-nots. The government intervention is supposedly to help those that don't have parents that have houses or that have the wherewithal to be able to help them. I mean, what do you sort of look at that? I mean, in terms of that as a system, it's like the biggest denial ever, don't you think, in terms of our politicians? And I don't want my property to fall in value either, by the way. And who does when they own property? But we also want our kids to be able to find a home. So do you have any opinions as to whether this actually can be addressed or will be addressed, or are we going to still be talking about it in 10 years' time?
Look, governments in Australia, both state and federal, are focused on the problem, and there's they are doing quite a lot. But the problem, the thing is that politicians tend to not to like to do bad things to people. They don't like to reduce things. They like to increase things. So in general, as a generalisation, and so therefore the political classes tend to focus on supply. of housing. And the whole focus for dealing with housing affordability for them is to increase supply, because that's a kind of a nice sounding thing to do. To reduce demand is actually difficult. You have to do tough things to people and reduce something, and politicians don't like doing that. So there is a lot of focus on increasing supply. For example, Victoria has a target now of 2.2 million homes in 25 years, and to achieve that, they're giving each local council, a target. And on the whole, on average, that means that is a doubling of the number of houses in each council area through densifying each council suburb. They're basically being required to to double the amount of housing in their area. Well,
they double the amount of zoning to allow for housing. Yeah.
They're increasing the height restrictions from two stories around stations to 6 stories and this sort of thing. The problem with that is that there isn't really a penalty on the councils if they don't do it. It's basically best endeavours, and there's going to be a lot of problems with that. I mean, people generally do not want their suburbs to be densified and have high rise through the suburbs. I mean, I think everyone's okay with units of 3 or 4 units being built on a suburban block, but not to have 6 stories all over the place. So I think that there's going to be a lot of pushback on that. And broadly speaking, you said you don't want the value of your house to go down, and that's fundamentally the problem here. Is that most people in Australia own a house, right? And most of the wealth in Australia is created through housing, and everyone who owns a house, particularly young people, are relying on that house to build them some equity and wealth over time. So the last thing they want is for house prices to come down. Or
as soon as you're in.
I mean, the last thing you want is for you want your house price to keep rising, right? But in order for, if anyone wanted the house price to income ratio to go back to what it was, then house prices would have to not move for 20 years to allow incomes to catch up. Well, if I say that to people who own a house, particularly young people, that's like they're horrified at that idea. That's the last thing anyone wants. And so there's a real fundamental problem. And so I think that the main issue, the main thing that has to be done with housing is for the political leaders to persuade everybody about what's needed, because otherwise it won't happen. There's no kind of political mandate or momentum towards achieving the goal. I mean, the best with the political kind of mandate that's around, and the thing that everyone wants with housing, the best that could be achieved is that the house prices start to rise at the same pace as incomes. Instead of rising at 6% per annum, which has been the case for 25 years, it goes back to 3% per annum increase, which is more or less the same as incomes. And therefore, that would mean that the house price to income ratio that we've currently got would be locked in. So we wouldn't. So if you reckon that house prices are unaffordable now, that's what will be the case forever. My view, we need to try to get it back to what it was, which means house prices not increasing at 3% on average per annum, but not increasing at all.
Yeah, I mean, that back to that sort of zoning conversation, we're seeing obviously a lot of push in New South Wales to Chris Minns, and they're pretty hopeful and pretty courageous sort of measures he's implementing, and he's upsetting a lot of people that, where these big zoning changes where they didn't expect, zoning to be so severe around train stations. But, I have to say my hat's off to him because he is being pretty brave. But I do think he's going to create a 2-tier market. You're going to find the properties that are, in the zoning that's going to likely go more high density around train stations are now going to appeal to the developer market. So, a lot of homeowners are going to take that up once they get a good enough offer, or they combine with a few houses around them, and then they become, feasible to developers. And then you're going to find that the people that are about, not walking distance to the train station, they're going to say, well, I'm going to stay in this property because I don't want to buy a property near a train station because I like this, a nice little sanctuary. And, Alan, you must just notice when you look back over generations, just people are living in their homes a lot longer than they ever have. And the turnover rate and the amount of listings on the market is declining every year. So yes, we would love for properties to just rise at, wage growth. But the people in the market right now are the people who are getting significant wage growth, and they're competing on a few number of properties on the market. And so do you think that marginal buyer problem in the property market, where every property is priced on what's selling today versus what they would actually sell at if everyone was selling?
Oh, yeah, of course. I think you make an interesting point about the thing around stations and not around stations, and that's this bit. New South Wales and Victoria are doing much the same thing, where they're trying to have a lot more cluster of housing around stations. And as you say, it's a bit courageous. Mind you, I don't think it's going to happen. But anyway,
no.
Thing is,
I don't either.
The thing is that it's a strategy that is low. That they're trying to save money. It's all about saving money, because what they're doing by trying to ensure that there are more dwellings built around stations is that they don't have to build more stations.
Yeah.
I mean, my view is that it's going to be hard to pull off, because everyone's going to object and it's going to be difficult, and maybe it'll work, maybe it won't. But basically what they're trying to do is increase the amount of housing around existing stations. I think they need to build more stations further out and have faster trains going to those stations so that people can commute.
That's interesting.
From further out. But the trouble with that is it's really expensive. Our train system, particularly the country train system in Australia, is terrible. And the trains are slow. You can't commute really with country trains. They just take too long, and there's not enough people get on them and all this stuff. So, but if you travel on trains in Europe, they're all fantastic. They're fast. You can go all over the place really quickly, and they're efficient. So we've kind of really fallen down in Australia on trains. And it means that everyone has to be clustered close to the city. Everyone has to, because you can't really get to work and to other facilities unless you do. And so we kind of got this problem, and I don't think there's any impetus from governments in Australia to do something about that, because they haven't got any money. I mean, Victoria's completely broke. New South Wales really doesn't want to spend too much money, so they haven't got the money to sort of properly fund an efficient, well-serviced sprawl beyond the city as it is.
But don't we need a greater population to justify that? I mean, we interviewed Simon Kustermark a couple of weeks ago, and he was saying, I remember him saying that Berlin, I think, is the same area as Melbourne, but it has 6 times the population. So once you've actually densified a city, then you can justify, building satellite cities, for argument's sake. But the other thing too, around those, I've been watching this in the Upper North Shore of Sydney, where the Chris Minns government has, rezoned the land around stations, and you've got a lot of big family homes, big Federation family homes on big blocks of land. And there's like you said, Alan, I don't think it will happen. And I agree, because what's happening, these people are banding up with their neighbours, all right, but they're basically saying, well, I reckon my house is my lot, my part of a bigger development site is now worth $10 million. And so they're sitting there, these consortiums of these neighbours grouping together, forming these consortiums, going to market. These properties aren't transacting. They're not trading, because basically no developer can stack it up at the money that these people now want for their properties. So there's lots of, it's all well and good for the governments to run around saying, right, we're going to put targets. Because, I mean, look, they've been doing targets for decades, right? Every new government brings a new set of targets in. And it's like, oh, but why are these targets better than the last targets? Oh, no, we're really serious about these targets. Those ones we weren't so serious about, but it really, you can put the targets in place, and the council can be penalised, but you can't make a developer develop a site, and you can't make individual landowners sell their properties at a reasonable, dollar value so that actually can make these developments be feasible. So there's a lot of hurdles over and above the zoning issue when it comes to getting this stuff built.
I don't know whether Simon Koistermark made this point to you, but one of the points that Simon makes is that European cities like Berlin were developed a long time ago, before the car, right? So that they were dense. They were dense to begin with because people had to walk or get around on a horse, and so there's a culture in Berlin and other cities like Paris and so on. Basically, they're much denser. They were much denser to begin with. Everyone kind of accepts it. It's fine.
Yeah.
But the point that Simon makes is that the Australian cities were mostly developed after the Second World War, when cars became affordable. So everyone got a car, and so we were fine with spreading out. And so as the cities developed, we did it. There was this great sprawl that occurred, and everyone had sort of quite large blocks, the quarter-acre block and so on. They're not quarter-acre anymore, of course, but they used to be. And that was because we had cars, and everyone had affordable cars, and that's the kind of culture that developed. So although it's theoretically right that it's actually correct, of course, that a lot of these European cities got the same area as Melbourne and Sydney, but they've got twice or three times or whatever it is the population. I reckon it's just too late. It's no good. We can't say to Melbourne and Sydney people, listen, what we're going to do is we're going to be as dense as Berlin. They won't accept it. No one will accept it. So it's pointless to sort of talk about that, I reckon. Yep. I mean, it's just not going to happen.
Yeah, but equally, doesn't that make it, you can see why that's the problem then. We're trying to stretch out infrastructure because there's just less people around to utilise it, So I'm sort of talking about the conundrum of where we've got ourselves into.
I agree. I mean, it's a real problem, and this is in some ways this is the problem. That we're all kind of crowding into these sprawled cities, and we don't have enough housing in those cities because the housing is too spread out. And so, what are we going to do? It's probably true that we don't have the money to build the infrastructure that's required. For example, I mean, I've been looking at Melbourne and Geelong. So Geelong has been developed, and it's basically become an outer suburb of Melbourne, but it's 100 kilometres away or so, and there's a whole lot of vacant land between Melbourne and Geelong. But there's a lot of new housing being developed just on the outskirts of Geelong, big housing estates.
Yep.
That are being built there. But the trouble is that the train that goes from Melbourne to Geelong and then beyond into the new housing estates is run by V-Line, the country rail service. Mm-hmm. And basically it's a country train. It's a diesel train. It's non-electrified. The country trains don't carry many people. They're not very reliable. They don't run that often. So if the train line from Melbourne to Geelong and beyond was electrified and then turned into a proper commuter service, then it would be viable to live in Geelong and work in Melbourne because you could get there in less than an hour. But it's not really at the moment. A lot of people do. They drive or they manage the train situation, but it's hard. And also, if there was a proper train between Melbourne and Geelong, all of the land between those two places would be able to be developed. There's a whole lot of vacant land with an airport that could be developed with train stations all the way down. But that's a massive expense, which, the Victorian government can't possibly afford.
Alan, there's lots of things when you look at the property market that don't really make sense, right? We've got to get smaller and smaller households every year. And, we've got enough housing if we allocated it the right way. A lot of empty bedrooms, a lot of people living longer that probably maybe could go into some type of older age care, or they could downsize. And what's your thoughts on, just the allocation of housing, and somehow the system doesn't encourage people to move into the right type of property that suits their needs, and people stay in properties due to wealth reasons or due to other reasons?
Yeah, look, that's true. No doubt about it. There's just a limited number of things that governments can do to change it. I mean, they've got tax powers and they've got regulation powers. So you could sort of tax people more if they lived in a house that had too many bedrooms. But that'd be unpopular. I don't think they're going to do that. They can't force people out of houses, basically. I mean, no. It's just too hard. There's a the Victorian government has imposed a vacant property tax. It's a sort of an increased land tax, it's a land tax on properties that are vacant for more than 6 months of the year. I mean, I think that's good. It's worth trying. I hope it works. I mean, it doesn't really apply to beach houses, which are obviously empty when the people are in their main house, and when they're living in the beach house, the main house is empty. Well, what are you going to do about that?
I'm on a personal mission to help more people make better property decisions. And you can find out all about what I'm working on at veronicamorgan.com.au. And there you'll find resources for first home buyers, details about my buyer's agent mentoring program, access to suburb help for investors, or if you're looking to buy your dream home or an investment property in Sydney's inner west, eastern suburbs or lower North Shore, you can connect with my team at Good Deeds Property Buyers.
If you're thinking about buying your first home, upgrading to a new one, or purchasing an investment property anywhere in Australia, we would love to carefully guide you through this journey and importantly get the finance right. Please reach out via our website, wealthful.com.au.
Well, I mean, they have made some big changes in Victoria. They have been changed the rules around land tax quite significantly, to be honest. They removed the thresholds for land. And so basically you started paying land tax basically from $1, which meant that land tax bills really increased, particularly on really valuable land. And, when people did have their second homes and they had their city pad and then their beach house down Mornington, that's actually much more expensive now, particularly as their home interest rates have gone up as well. And do you see that, things that, are anti-investor just continuing? We saw this week that New South Wales government are making some changes to the rules around tenancy rights, which are pro-tenant, which I'm not saying I'm against, and anti-investor. Do you see that that's where the easy vote wins can happen if you just target investors, but it's really hard to target anything that's anti-homeowner?
I think it is difficult. It's just another example of governments really happy to do stuff that raises money for them, while also being seen to do something about housing affordability. That's great. If you can do something that you can say is going to improve housing affordability, but also get you more money, well, that's fantastic.
Yeah.
As for tenancy laws, look, I think we are heading into a time in Australia where people will have to rent for their whole lives. And the problem we have here is that our tenancy laws tend to be a bit too skewed towards the landlord having the power. So the balance of power between tenants and landlords is not really sustainable, I think, for a renting society, if that's where we're heading. Look, I don't have too much of a problem with that. If we can possibly get to a situation where housing is not the way to wealth creation, which I think we need to, then it doesn't matter whether you rent or own, because you're not creating wealth in your house anyway. But the reason everyone wants to own a house, there's two reasons everyone wants to own a house. And one is to build wealth, because that's the way everyone thinks the only way to do it in Australia. And secondly, because, if you rent, you can get kicked out at any time. You can't have a pet. You don't have a lot of power. So I do think that changing the balance of power through tenancy laws is probably necessary in order to allow people to rent more. But the other thing that needs to happen to get people to rent and to be happy renting is to remove the idea that housing is the way to build wealth.
It's interesting, though, because it comes back to political, doesn't it? Because the fact is that our governments have shirked their responsibility or their participation in providing housing over the past 7 or so decades. And so that has been left, largely in the province of mums and dads investors or individual investors. And you mentioned earlier that, the politicians love to talk about positives and giving. And so therefore supply as the answer is what you hear from politicians all the time instead of demand. But, if they actually provided some of the supply themselves, that'd take care of a lot of demand as well as actually providing long-term stability. I mean, there was I watched 7:30 report last night and there was a story about public housing in New South Wales and some of the woeful state of these condition of these properties that they featured on the show anyway. So then, we've had diminished stock, and the stock that has been kept hasn't necessarily been maintained that well. So governments could actually look at providing supply themselves and tackling demand in the same action. But the problem is, of course, with landlords is the more that you support tenants, which is important, and I'm not saying it shouldn't be done, but you also can't take away from landlords at the same time. You can't impose additional costs at the same time. You can't, you know what I mean? So if you're wanting to take away the flexibility of a landlord has over their property, then there has to be some level of, okay, governments have given this responsibility to individuals for all these decades. Yes, it's created a situation where you're looking at creating wealth through property, but at the same time, it's not feasible to continue to raise costs of holding properties and reduce flexibility around that property at the same time. And that's what worries me when I see some of this tenancy reform, is that it doesn't seem to understand there's two sides of the equation. And I don't know if you've given any thought to that, but also I note when I sort of read the report, you put a chart in your essay about that really clearly showed that affordability problem, the decoupling of incomes and dwelling prices. So going back to that, and that really happened, it's basically pinpointed to 1999, can't we? And so that again is back, how investors have contributed to this problem, I guess. Can we talk to a bit of that? Because this is...
Yeah, so when I approached the essay, writing the essay, I thought, well, I need to find out what happened to house prices and when did it happen. I thought that might sort of lead me to answer the question of why. And the answer is, as you say, the charts are quite clear that the house prices started rising in the year 2000. So the question is, what happened then? And the answer is that at the end of 1999, the capital gains tax was halved. Capital gains tax had been introduced in 1985, and the deal was from that time that you added a capital gain to your income minus the effect of inflation. And in 1999, the Howard government appointed a panel of business people to examine business taxation. And they surprisingly came up with, apart from recommending a reduction in the company tax rate, which is what the purpose of the review was about, they also recommended that the inflation adjustment in the capital gains tax be replaced with a 50% discount. That is to say, only half of the capital gain needed to be added to your income. And the reason that the businessmen recommended that was because they thought that it would lead to Australians investing more in companies, their companies, and push their share prices up and make them a bit richer. So they kind of had that in mind. And of course, what happened was that everyone started investing in houses to get the capital gains tax discount. At the time, that 50% discount was roughly the same as the inflation adjustment over the period of time that people mostly owned the house, because inflation was higher then than it is now. So it seemed like a reasonable thing to do, to change the fairly complicated CPI adjustment to capital gain with a simpler 50% deduction, which would be about the same amount of discount. The problem, in my view, what that did was psychological, because nobody understands inflation or understands CPI, so really it was all a bit of a mystery to everybody. But everyone understands a discount. You go all of a sudden 50% discount, everyone goes, oh, okay, I understand. And suddenly housing became the preferred tax avoidance method in Australia, on top of the negative gearing, which we'd already had, which is that you're able to deduct your losses or costs in owning an asset, any asset, not just property, against other income. And so the combination of negative gearing and the capital gains tax discount has been enormously powerful, I think, in driving up house prices, because it's not so much that it just brought more people to invest, although it did do that. It allowed people to pay more because of the because of the way that it reduced the costs of owning the property.
It's interesting, isn't it, about our national psyche, that instead of everyone jumping on the bandwagon and buying more companies and more stocks and shares, that they actually bought property instead. It says a lot, don't you think, about how Australians, like, it's in our DNA almost how we think about property.
Yes, that's right. I mean, we've always had this view that housing is the way to build wealth, and that was supercharged in after 2000 by the tax change.
Did we have that before Menzies, though? Before after the World War II, when there was just so much, focus on getting ownership higher, didn't it? Wasn't it at some point up to 70% home ownership rates at one point? Is it something that we believed before World War II, do you think? Or is it something that really, was, I guess, the boomers grabbed hold of? And I don't know.
Well, I actually think it goes back to the 1890s boom.
Right.
Where house prices, absolutely soared. And then there was a crash and everyone lost their money and banks all went broke and it was terrible. Obviously, there was a depression in 1993 as a result of the housing crash. But I think, there was a lot of... there's a lot of talk at the time, articles about, how housing is the great way to build wealth. And obviously, that went off the boil after the crash. And then during the first half of the 20th century, and then during the Second World War, prices were frozen by government legislation, and rents were frozen. House prices and rents were both frozen. So that when those restrictions, the wartime restrictions, were lifted, house prices doubled in the late 1940s, and it was just a kind of a once-off catch-up situation. And then when Menzies came in 1949, his whole thing was that renters vote Labor, homeowners vote Liberal, and so he promoted home ownership as being, a fundamental part of Australian life. And it kind of, it did go into the national psyche that, it's all about home ownership. And Menzies was in power for a long time. So, 17 years, he was kind of going on about it. And he also destroyed basically what had been a very strong public housing situation in the States, where they were building a lot of public housing at the time as a result of money from the Commonwealth Housing Commission, which was set up in 1944. So, he and Menzies kind of got rid of a lot of public housing because he basically forced the states to sell their housing commission housing to the tenants and to anyone else because, of the idea that owners vote Liberal and renters vote Labor.
Interesting.
Alan, when you did your essay, was there anything that you went into writing that and you had some really strong beliefs on what you thought was the problem and why things happened, and just through your research and through, thinking about it, you're really surprised at some of the evidence? Was there some things that you either made you much more pro, growth in the future, I guess, or more fearful that this problem's going to get worse, or, what were some of your learnings, I guess, through that research?
Well, look, I did approach it with a blank sort of sheet of paper. I didn't really have any prejudiced ideas. I just, wanted to see what was going on. I came out of the process pessimistic about the chances of achieving denser suburbs. I kind of came to understand the political momentum behind house prices rising because everyone owns a house, or
right.
People own a house, and I obviously saw what happened in 2016 and 2019 to the Labor government when they proposed reducing the capital gains tax discount to 25% and also confining negative gearing to new housing only. That was a kind of an interesting and good policy in 2016.
Yeah.
And I mean, they kind of nearly won in 2016. They came within, I think, a seat of winning. And then, 2019, they wanted to make sure of it, so they increased their spending promises enormously in 2019, trying to make sure of it. But to pay for the spending, they had to come up with another tax proposal, which was dividend franking.
Yeah.
And the trouble is that they don't know whether dividend franking or negative gearing cost them that 2019 election.
Yeah.
So they dropped everything.
Mm.
And so ever since then, tax change has been off the table. And I think that's really regrettable because, that's one of the things. I mean, I don't think there's any single magic bullet to this, but I do think that in order to achieve better housing affordability, everything has to be done, every single thing, including fixing the tax incentives.
Yeah.
And actually doing what Labor proposed in 2016, which was to either get rid of negative gearing entirely or just focusing on new housing, and also to reduce the capital gains tax discount, because now inflation isn't what it was. It's like
True.
Yeah. If you went back to adjusting the capital gain for inflation as it used to be, it would be about 25% of a discount. So you could either go back to a CPI adjustment or make it 25% instead of 50%, and that'd be reasonable.
Yeah.
But nobody wants to touch that because it's toxic.
Yeah.
I think the issue you'll find with that one is I do think there'll be unintended consequences when you make that change, and that'll change what's now investors will change where they're buying, right? So they won't exit the market completely, right? But they'll be way less enticed to invest. And so if they're not going to invest as much, but they've still got borrowing capacity and their house grows tax-free, then what you're going to do is use that capacity instead of buying an investment property to upgrade your home or to renovate your home, etc., because you know that those gains are tax-free. I think Charlie Munger or Warren Buffett sort of said, if you change the incentives, you'll change the behavior. And I think what will happen is that the market will adapt to that new world, and you'll see less investment stock and less rentals in certain areas. You'll see more rentals created in other areas where investors go. And I think what you will do is you'll put more and more, it'll be harder to rent. You can't say that you're not going to affect the rental market with changes like that. And if it's harder to rent, then you want to own a home more. And then also it's better to own a home because it grows tax-free. And so you'll see this real push to, spending more money on your home. Do you see those sort of things happening, or do you think that's just a risk worth taking? If we slow down investor growth, that's just one way of reducing demand. But who cares what happens to home ownership?
Look, I think one of the differences between Australia and other countries is that our investment properties for rent are owned by individuals.
Yeah,
which is because of the negative gearing and capital gains tax discount, which isn't really available to institutions. And where in Europe and America, the rental properties tend to be owned by institutions, pension funds and so on. There's a push in Australia by governments, I think particularly in New South Wales, to try to encourage more rent, what they call build to rent, as opposed to build to sell. That is to say, developers will build an apartment block with the purpose of renting it out and then owning it and getting their return from the rent, rather than simply selling each individual apartment to individual buyers. And they're trying to come up with some tax incentives to achieve that. And I think that's really worth doing. Good on them. And because, I think that if we can get to a situation where it's worthwhile for super funds, because we've got so much money in super, if it was worthwhile for super funds to own residential housing for a return, then that'd be great.
If that sort of happens, I mean, obviously institutional owners will provide more stability for tenants and sort of longer tenure and that sort of thing. Actually, I wish I could remember where I read this, but I've read some research around tenants not actually really wanting longer leases. So recently, because I'm just launching my own property management business, actually, and I was reading up on that. But that surprised me, because I thought we should approach things perhaps a little bit differently to what's commonly accepted. But it was actually tenants actually, highly regarded their flexibility as well. But anyway, that's an aside. In a situation where you've got institutions that they need a return on their investment, other than, and then you've got to give them tax incentives rather than individual investors. It's still about wealth creation, isn't it? Because it's actually wealth creation for the members of the super fund or for the shareholders of a corporation. It's just shifting it from dealing with lots of individuals to dealing with sort of, larger groups of owners. In terms of the end result for tenants or the experience for homeownership, for affordability, can you see that would make any real shift beyond that?
Well, it's interesting. I mean, you're right. There's an issue. There's a problem there. One of the reasons institutions tend not to buy residential housing for investment is that they tend to see property as a yield investment. That is to say, they invested in property for income. And that's really for commercial property. So they buy shopping centres and office blocks, not with the intention of getting a capital gain, but with the intention of achieving sort of a 4 or 5 or 6% annual yield from the rent. And they might get a GDP, a sort of capital gain, but that's about it. With residential property, the rental yield is much lower. It's like 2 to 3%, or even less, and it's all about a capital gain. So institutions tend not to see property as a capital gain thing, whereas individuals do. Individuals invest in a couple of residential property in order to get a capital gain because you want the capital gains tax discount. So that does need to change, but it does imply that rents would be a higher percentage of the value of the property than they are now in order for that to occur.
Yeah.
Which is obviously not ideal either.
No.
So I don't know.
Looking at another one of your charts, actually, I could see over the decades prior to our last recession, forgetting COVID, recessions were fairly frequent and house prices were also more stable. I'm wondering, do you think there might be a relationship between the lack of a recession and house price growth?
Yeah, I think there's something in that. We haven't had a proper recession since 1991. There was obviously a sort of a technical recession during the pandemic, but that's not the issue. So yeah, I think there's an issue. There is something in that. I mean, the only reason house prices have come down since then is either because interest rates went up, which was what happened in 2022, and interest rates started going up in the beginning of 2022, and house prices fell, but then they went up again in 2023 because of immigration. And the other time that house prices fell was 2017 when APRA cracked down on investment lending by banks. And that led to a 9% fall in house prices as well at that time. And obviously house prices fell in the GFC, but not that much.
And the early 2000s.
I remember our conversation back in 2018 and we were sort of coming up with a view of what we were seeing back then and saying that, that obviously supply was getting tighter and that, there was a negative year and didn't go through and Labor didn't win the election. I remember we were talking about that we were quite pro-housing and you were like, I guess on the other side, a little bit negative towards the short-term prospects. And we all got surprised in 2019. They didn't win the election, like you said. And, rate got cut, APRA stepped in, and then there was this sort of triple forces pushing prices up on low supply. And I just wonder, have you put any thought into, I guess the dangers even in the short term, that even though prices are unaffordable right now, that things can happen that can make them even more unaffordable. We've already started to see, pressure on APRA to cut the serviceability buffer. As soon as rates start to stabilise or there's rate cuts, there's the tax cuts. We've sort of seen banks change mortgage loan terms. We've started to see 40-year loans, which will mean that you can borrow more money. What's your sort of take that, yes, prices, even like a liberal to win the election, they're saying, hey, you can get access to your super, right? So that's going to, you got pressure to change land tax for first home buyers, which will bring more demand into the market. So are you, even though prices are unaffordable, are you not, I guess, do you see that potentially even more innovation is going to happen to keep the sort of property Ponzi going?
Yeah, it could be. I mean, look, obviously it's a market. That means the price is a function of demand and supply. If demand is increased by whatever reasons, then it will push up prices unless there's an equal increase in supply. That's pretty simple. So if demand for housing and the ability of people to pay is increased by allowing them access to super in order to supplement the deposit, then that will lead to an increase in prices unless there is a big increase in supply. And so that's what's going to happen. I mean, I can see the reason for doing the superannuation thing, because a lot of people don't have parents who can give them, 50 or 100 grand to help with the deposit.
Yeah.
So, those people get left out. So I can see why they're doing it, but it's not really that helpful, to be honest.
The Band-Aid.
Yeah. And I think what we, often sort of not represented in prices of property growth is that it's actually what people are investing in their homes in terms of renovations. And, if you go around our suburbs, what used to be a 2-bed house is now 4-bed, 3-bath. A 2-bedroom cottage is now a 3-bed, 2-bath. And bit by bit, our housing market's getting renovated more and more. And, because people are getting stuck in those homes. I can't afford to go from the 3-bed house to the 4-bed house. It's an extra $500,000, $700,000, but I can spend $200,000 renovating and living here long term. I don't want to pay stamp duty and selling costs, and I can't borrow the money because I've hit my peak earning capacity. And so, have you sort of, and that's going to keep continuing even in the last couple of years where the interest rates have been really high and borrowing capacities are tight. Renovation loans are at all-time highs still. We're still renovating our homes at an enormous rate. So what's your sort of take on, house prices have gone up a lot, but our housing stock isn't what it used to be, as
That's right.
whereas our got more, our living standards have increased. Also attached to that is our desire to live in nicer and bigger homes.
It is interesting how housing has changed. I mean, when I was a kid, housing basically involved a big backyard and a big front yard. Now the backyard's more or almost non-existent with new housing, but you've got to have a butler's pantry and a walk-in road.
And a cinema room.
Well, you've got to have a cinema room, and you have to have an ensuite bathroom for every every bedroom. And so the house itself is, really being upgraded with, all these walk-in robes and ensuite bathrooms and butler's pantries. But the land has shrunk, or at least the house is taking up more of the land.
I think both is happening.
Yeah. So, look, I suppose there's an element of fashion in that as to what people these days. I don't know why nobody wants a backyard anymore. Maybe it's just not possible, can't afford it, but everyone seems to be okay with not having much of a backyard anymore. I don't know.
Yeah.
Yeah.
You say that housing wealth is both meaningless and destructive. Tell us what you mean by that.
Well, look, I say it's meaningless because, you've got to buy another house. If you sell your house, you've got to buy another one. So it becomes meaningful when there's a shift from generation to one generation to the next, and your parents die. The trouble is that everyone's living longer, so you don't inherit your parents' house, the wealth in your parents' house, until you're about 50 or 60, because your parents will live to 90.
Yeah.
So that's kind of it isn't really meaningful in that sense anymore. I mean, you can buy better and better houses all the time, but the wealth
so relative
is, to increase your lifestyle. Everyone's kind of being squeezed in their cost of living because the houses cost so much. And it's destructive in many ways because it's not a productive investment. I mean, it would have been good if in 1999, that change in taxation led to people investing in companies, because that might have led to the creation of Australian Silicon Valley, which, we do not have. I mean, all of our wealth, all of our corporate kind of wealth in Australia is in banks and mining companies, whereas, suddenly America's...
Yeah.
Because people in America tend to invest in companies, not housing. Or, just that's at the margin. I mean, I'm not saying it's 100% one way or the other, but it is the case that there's more people investing in companies and putting money into companies in the United States than in Australia, and they've ended up with Silicon Valley.
Alan, can you finish us off with this conversation? I appreciate all your time with the property dumbo. You might not have picked it up on the invite, but a story that we could all learn from.
Oh,
I know, we're hitting with this, remember.
That's all right.
Yeah.
A story of an old...
Unless you've got an example.
Like a friend of a friend has done something a bit...
A mistake
humorous
is made.
Mistake, yeah.
Oh, well...
Nothing you can think of?
Well, I do think, and there was a neighbour of mine, and this is not a mistake, there's a neighbour of mine that they move every 2 or 3 years. They move into a new house, renovate it, and then sell it. And the way they're building the family home, and then make a capital gain every couple of years and move the family around. And I think that's really a lesson in the power of tax to change people's behaviour. I mean, who wants to move every couple of years? But people do it because of the tax incentive in the tax-free capital gain on a family home.
And some people have the skills and the ability to actually do the renovating, and I've known the odd person like that as well. Anyone who hasn't got the skills, it's a lot more difficult than they anticipate. Yeah. Look, thank you so much, Alan. This has been a really interesting chat, and we really appreciate your time today.
Okay.
Thank you, Alan.
No worries. Thank you.
If you have a question that you'd like us to answer in an upcoming Q&A episode, you can send us a voicemail or written question via the website, theelephantintheroom.com.au, or you can email us directly at questions@theelephantintheroom.com.au. If you like what you're hearing, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars would be great. I know that sounds a bit cringy, but we have it on good authority that every review helps make it easier for other people to find out about us and hear what our amazing guests have to say.